3M is one dividend stock down 60% that you might regret not buying on this dip here. Now, the stock price decrease is justified, although maybe a little overdone. So I'm going to go through this video highlighting why I think this is a good time to buy 3M stock. Starting with the company's excellent dividend yield. 3M stock is offering excuse me, offering investors a dividend yield of 5.84%, which is a robust dividend yield compared to the 10-year government treasury bond that's offering investors about 3.25% as of this recording. So looking at 3M annual revenue, you can start to see why the stock price has been down off its highs since 2018. The company has, for one, something that is not on the screen here is a litigation issue, a legal issue that's in the courts right now that could cost the company lots of money, and investors are pricing in that risk into the stock, right? So they've sold off the stock to a degree to protect against the risk that the legal issue turns out on the negative for 3M. But typically, I'm not a legal expert, but when it comes to these massive companies, when they face legal issues, I tend to believe that the probability for the outcome is a little less than feared when you're dealing with these large corporations, because they've got billions and billions of dollars. They can hire the most experienced legal teams and they can work the outcome in their favor to some degree, right? Whereas if it was a smaller company and they had this big of a legal issue, I wouldn't be so optimistic about their outcome because they don't have as much money to fight the legal case. But with 3M, they've got plenty of money, revenues of $34 billion in its most recent year. So plenty of money to fight this legal issue, to, work it in its favor, maybe get into a settlement to lower the negative outcome. They tend to find a way to work these things out, whereas the smaller companies, not so much. And here's another reason why the stock price could be down as much as it is. Look at 3M's operating profit margin over the trailing 12 months. It was heading nicely upward up until 2018, where you see the operating profit margin declining from close to 22% all the way down to 12.3%. So you could see that decrease in operating profit margin from 2018 until its most recent update. If I go back at the stock price chart, what do you have there? The stock price has declined since 2018, really coinciding with this decrease in its operating profit margin. So the company has experienced a declining operating profit margin for several reasons. The most recent decrease here since 2021, the biggest cause for this recent decrease is the inflationary pressure, rising cost of goods sold on its operations. But you can say that the company's already paid the price for this. The stock is already down 60.45% off the high, and inflation is getting better. It's not getting worse, right? Last year, inflation at its peak was near 10% in some parts of developed countries, and now it's falling. In the US in particular, it's falling considerably after the Federal Reserve has increased interest rates. So quarter over quarter, month over month, the impact of inflation is decreasing at 3M, which could mean that its operating profit margin levels out and starts to rise. Right? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now, because an operating profit margin of 12.86% is not terrible. The risk is that this continues to go downward. That's the big risk, is that it continues to go downward. because if it levels off at 12.86%, not so bad. However, the risk is that it keeps going downward. That's what has 3M's stock price down so much, is the risks of these negative outcomes, not just with the legal matter, but also with these falling profit margins. However, I would argue that investors and 3M stock has more than paid the price for those risks in the stock price being down 60.45%. And if you look at the valuation, 3M is trading at a forward price to earnings ratio of 10.77. You have rarely had the opportunity to buy this excellent business at this low of a valuation. So for all those reasons, I think that this dividend stock down 60%, investors might regret not buying this on the dip here for all the reasons I highlighted, including a very favorable valuation. All right, so that's all I've got for this video. Thank you so much for watching. Please click one of these videos I've got popping up on your screen, and I'll see you over there.